Welcome to Making Money. I'm Matt McCall. Thanks for joining me. It is Thursday, February 10th, almost halfway through the month already. It's flying by. We had the big inflation number this morning. I'm going to talk about that. It actually came in hotter than expected, believe it or not. How the market's reacting, a little surprising, do a little better than I would have thought. And then the big game is this Sunday, the Super Bowl. The Rams and the Bengals are going at it. I got some stocks that you need to keep an eye on. Not the ones you think of, but some stocks that are doing commercials for the first time. I got a heck of a watch list coming up right now. We got the big game, we got the big number inflation, all coming up right now on Making Money. Again, I'm Matt McCall. Thanks for joining me. It is the 10th of February. It is a Thursday, 2022. And we had a big number this morning. We had the January CPI number, which is the inflation number. And I got to tell you, it came in pretty damn hot. And we'll talk about the markets in a moment, and we'll talk about what interest rates are doing based on this. But let me break down the number for you. And you've probably seen the headlines already, but I think it's important to hear this. So the Consumer Price Index, which is a CPI, which is the prices that consumers pay, that you and I pay. It was up 7.5% was the annual gain in January, year over year. Highest level since 1982. Consensus was about 7.3% increase year over year. December was the highest we've seen since 82, and that came in at 7%. So it continued to increase. A big reason we saw that, though, is based on some energy numbers. If you take a look at energy prices, and that's a big number contributor to the CPI, that was up 27% year over year in January. That's based off oil prices, petrol prices year over year. As we all know, gasoline, heating our home, all those prices have gone up, of course, quite a bit from last January. So you're seeing that. The crude oil prices, they rallied to a 7-year high earlier this year. So when you have oil said hitting a 7-year high in January, of course, those prices are going to be much higher than a year earlier. And that added a lot to that number. Within there also, which was a pretty big number, electricity prices, they jumped 4.2% month over month. That one hurts because we all have homes, hopefully, and we have paid electricity prices, and 4.2% month over month is a big gain. So that's in there as well. Food was also up, and if you take a look, food at home, so if you're eating at home, 1% increase for that. And then if you take a look at food away from home, 0.7%. Well, my life the last month and a half has been a lot of food away from home, so maybe I'm actually doing it right because the prices haven't gone up as much. And then if you take away food and energy, it's what they call the core CPI. That was up 6% in January. Again, biggest jump we've seen since 82. In December, it's up 5.5%. One more thing I want to talk about within the numbers is the shelter prices. This is a big part of it, and that's rent is a big thing. 0.5% increase in rent prices month over month. So you're seeing some big numbers, and with home prices continuing to go up, it's more affordable for a lot of people to rent, and then the rents are going up. So I get it. This is hurting a lot of people. So what does this mean for the market? Now that we just ran through those numbers really quick. Well, the 10-year yield, I'll pull up a chart here for you right now. The first time since 2019, we hit 2% this morning. Right now, it's about 1.99%. Let's call it 2%. If I zoom out here, you'll see how high it really is compared to where we've been. We have not been above 2% since, as I mentioned, 2019. But we do have a lot of resistance around this 2 level right here, also around 2.1. So we have a ton of resistance. I personally think that we probably top out around here. I think this inflation number is probably the hottest that we're going to see. I think we're probably going to pull back a little bit when we get February's number. Come March 10th, that's when that number is going to be released. And that will be before the next Fed meeting too, just keep in mind. So this is important to know, though, that interest rates are going higher. Mortgage rates are going higher. So we all know that, but inflation is directly leading to that. The other thing I want to talk about is how the markets reacted. Because if you see the fact that the 10-year hit 2%, if you see inflation coming in hotter than expected, what would you think from the markets? Well, let's take a look, and I'll tell you exactly what the markets are doing. And as you can see here, look, the S&P right now, it's about 10:40 Eastern time in the morning. The S&P right now is only down 1.1%, folks. You'd see we opened in a low at a session. We're near the highs of the day right now. That's telling me something, that maybe this is priced in. It's something I've been telling you for a while. Maybe this is all priced into the market. We know inflation's here. We know interest rates are going to be increased. This isn't rocket science. This has been really laid out by the Fed, laid out by the markets. And here's another one. This is really telling. This is ARK. I talk about this one a lot. The ARK Innovation ETF, ARKK. It is actually up 2.4% today with a 10-year hitting 2%. Wasn't the entire argument of why ARK fell here is because interest rates went up. We now hit that psychological level of 2%, and this is actually up 2.4% today. This innovation ETF. This is, to me, folks, priced in. Priced in. Look at this. It's sitting now a new 1-month high. This is amazing to me. This shows you that when you see headlines, the headlines are garbage half the time. It doesn't tell you the real story, folks. All right, I could talk inflation all day, but I don't want to talk inflation all day because you get enough of it on the news, but you need to know what's really going on, how it's moving stocks. Stocks are actually reacting really well to it, in my opinion, even though, again, the 10-year at 2% right now. All right, before we jump into the big game, the Super Bowl, I'm even going to maybe give you my pick for the Super Bowl. I'll probably bet the opposite if I were you. But one of our analysts here at Stansberry shared a really amazing stat recently, and I think it was yesterday. But the amount of hedging on U.S. stocks has risen to the highest level in 2 years, since April of 2020. We know what happened in April 2020. That's when the market bottomed after the pandemic began. And hedging, what that means is, it means people are either shorting stocks or buying puts, doing something to protect their portfolio from lower prices. So a lot of times when you see this happen, it's a contrarian indicator that the market's probably at or near bottom, and in the near term, we should see stocks move higher. This number came from Sundial Capital Research, and they came out and basically said that put buying, it's been elevated among both large and small traders, not just the little guys, and that their equity hedging index is 80% above last week's for the first time since April 2020. That's where that 2-year number came from. It's only the 33rd week in the 22 years that they've been doing this that's above that threshold. And after 27 of those 33, 27 of the 33, folks, that's 9 out of 11, the S&P rallied during the next few months. So again, this is a contrarian indicator to me, and this is telling me just one more time. I've talked about this a lot with put-call ratios, with the amount of people shorting stocks, with the amount of people moving to cash. These are all times when people panic, and when the masses panic, when the sheep panic, the wolf comes out. And the wolf is coming out right now. If you're bullish, I just showed you that ARK ETF sitting near the high today, now up 2.6%. That should tell you something, folks. That is an indicator to me that the average person is giving up. They're throwing in a towel, and you don't want to be doing that. If anything right now, that's the last thing you should be doing, is throwing in a towel. Let's talk Super Bowl. I mean, how can we not? I'm the biggest football fan probably out there, or rival any football fan out there. Diehard Philadelphia Eagle fan. Just over 4 years ago was one of the greatest days of my life when the Philadelphia Eagles beat Tom Brady and the Patriots for their first Super Bowl victory ever. They've had world championships, but never had a Super Bowl victory. And I think we're on our way back there in a couple of years. But this year, I think it's going to be a great game. You got the Los Angeles Rams coming out of the NFC. You got the Cincinnati Bengals coming out of AFC. Rams were there a few years ago. Bengals haven't been there since the 80s. I think it's going to be a great game. However, let's put an investment spin on this because there's actually some real live things going on here that are important. One is sports gambling. This is an area, a mega trend that I've liked for a while. The stocks haven't been the best performers since the federal government came out and took away the act that would not allow states to have sports gambling. When they removed that, I think it was 2018, it allowed each state to pass, if they wanted to, the ability for for people in the state to bet on sports. So right now, quickly enough, within 4 years or so, there's now 30 states, as well as DC, that there's some type of legal sports gambling available. You can go wager on sports. Play USA believes that the handle, which means the amount wagered on a Super Bowl, could top $1 billion. $1 billion of legally wagered money on one 3-hour game. It's amazing. And that's about double last year. So a big reason for this is New York came online. The state of New York in January is now people are able to bet in New York, and they're expected to have a big portion of that number going forward. More than half Americans have access to the ability to wager, so it's a big number out there. We see mobile gaming where you can bet on your phone, which is pretty amazing. Of that big number, Nevada still is the leader, obviously with Las Vegas out there, expected to be about 175 million of that 1 billion estimated. But New York, as I just mentioned, expect to be at 160 million. So, of course, New York, a very populous state. You have New York City. So that's something to keep an eye on. I think a lot of these stocks are being down. And two companies, a lot of companies in this realm. And there's an ETF I'll mention in a moment as well. But Penn National, which is symbol PENN, they own some racetracks, some horse racetracks. They own some places like that have slot machines. They own some casinos as well. They own some sports books within casinos as well. They have live sports wagering in Colorado, Illinois, Indiana, Iowa, Mississippi, Michigan, Nevada, PA, and West Virginia. They also own Barstool Sports, which you may have heard of Barstool Sports, that is a big player when it comes to gambling. They bought them a couple years ago. Not a huge growth story. Their revenue is only expected to grow a little over 5% next couple of years. Bottom line earnings per share only about 8.2% next couple of years. That being said, it is relatively cheap versus the market and versus other stocks in this area. It has a forward PE ratio of less than 19, forward price of sales of 1.29. So it is a pretty well-positioned stock. It has not looked that good, honestly, in the last few months. It topped out around $142, fell down to 40, or less than 40. We're working our way back up. But down here, I mean, even getting back to where we were in September, folks, in the high 80s, you're looking at a hell of a return. You're looking at what, probably a 60, 70% return from there just to get, and you're still well off the high. I think some of these companies down here look good, and I think the continued expansion of sports gambling will eventually be in all states. And that's going to be something that the numbers are going to be astronomical. All of these leagues, the NBA is really big into it, NFL, they want to have a piece of the pie as well. They want to be part of it. They want to expand their viewership, which is what they do when they get more people wagering on it. You know, the casual fan, let's say, potentially, who doesn't really care about the game but wants to wager. You get more people watching it, more people buying paraphernalia, etc. So that's one that's one to keep an eye on for the Super Bowl. The other one is a more of a recent IPO. It's called Rush Street Interactive. Symbol's RSI. And I'll bring up the chart here for you real quick. And you can see with Rush Street Interactive, it went public back in 2020. Had a run up, sold off, came down. It's doing pretty nicely here the last couple of weeks, but most of these stocks that got beaten up have. They run an online casino and online sports betting. They also have some retail sports betting brick and mortar as well. It's a smaller company, about $2.4 billion. Their earnings are all over the place. They're still losing money. Revenue growth's a little bit better, about 17% annual. But again, this is one to keep an eye on because it's more of the online. It's good for mobile. They have the casino aspect as well. And again, a company that if the gaming continues, and it's going to move towards mobile, folks. I mean, you're not going to drive to the local casino to place a bet on your team for the Super Bowl. You're going to do it either via your phone or via your laptop, and that's just how it's going to be. Everything in the world is moving that way. So Rush Street is another one I want to throw out there. There are many out there. And one other I want to show you, and this is a ETF. It's the Round Hill Sports Betting and iGaming ETF, symbol BETZ. I love these symbols, BETZ, bets, obviously. And again, this has held up much better than a couple of the last two stocks I showed you, but it has some iGaming, which is basically gambling on your phone online. So it's a little bit more rounded, if you will. I prefer to buy a basket of stocks and build my own ETF, but this is one if you want to be lazy and go out there and do it. I see nothing wrong with that as well. So that's one angle to look at when it comes to Super Bowl. Another pretty cool angle is the commercials. You know, I know a lot of you out there don't give a damn about the game. You want to watch the commercials. And for me, because I'm a gamer, like I like watching the game, I'm a fan. When the commercials come on, I usually run to the restroom or go get some more chips and dip or whatever it might be. Where other people will run from the kitchen to see the commercials. So it's a little bit backwards. But I went through some of the people that are getting commercials. And just so you know, What do you think a 30-second commercial cost? They're as high as $7 million for a 30-second commercial. $7 million for 30 seconds. Shit. I mean, you really better get your money back on that. I mean, you got to sell a lot of goods to get your money back on that. But guess who bought the most so far, from what I could find? Anheuser-Busch, Budweiser, symbol BUD. And, what is one thing you think of when you think about Anheuser-Busch and you think about the commercials in the Super Bowl? I think of one word: Clydesdales. The horses with the big horses, and it's always like some really cool, pulling at your heartstrings type of commercial. I love that. But they're going to be pushing a ton of their brands, but they got 4 minutes of commercials. One of their commercials is they're going to be pushing an NFT commercial, a non-fungible token, the crypto world, NFTs. So I'm interested to see what that's going to look like. But they're pushing that, which is kind of neat. And to go along with that, though, there's several companies, speaking of crypto, that will also be having commercials in the Super Bowl for the first time. FTX, which they now are the sponsor of the Miami Heat stadium where they play, the arena where they play. So FTX has, I think, at least one commercial, maybe more than one. Crypto.com, you've probably seen a lot of these commercials as of late. They have a commercial that they're going to be running. And then the big guy, Coinbase, which is symbol COIN, which was a big IPO last year. They're going to be having one as well. This got hit with a lot of other IPOs. I remember on this first day, as I was still managing money, one of my clients wanted to buy it. And I said, listen, this is against my better judgment. I don't think you should buy it here. It's not saying I don't like the company. I just think it's way overpriced here. And typically, IPOs pull back. You never see one that opens high and never pulls back. So I never buy in that first day. I think it's crazy. And boy, did it pull back. It's down almost 50% still from where that high was on the first day of trading. Coinbase doesn't look bad, and I think they're going to continue to expand. And this is going to go by way of Bitcoin. If Bitcoin gets back above 69,000, it's all-time high, and it gets close to 100,000, which I think it hits at some point in the near future, this could easily be back in the 300s. But they have their first commercial coming out, which I think is pretty cool. And there's going to be a lot of push towards cryptos during this Super Bowl. And there's another one in a very niche area, which I think is pretty cool. And that company's called Wallbox, WALL, Wallbox. Symbol is WBX. It's a Spanish company, but they are an EV charging company, electric vehicle charging. It's about a $2.1 billion company. Their revenue is expected to increase the next couple of years by 53%. And, this will obviously be their first ever commercial for the Super Bowl. I'm interested in that. And you may have seen it. Wallbox, if you see it, a lot of people have it in their garage. It's like this green little box, and you take it and you plug it into your electric vehicle to charge. And at some point in your future, if anybody who owns electric vehicle is going to have that in their house. So this is a huge potential, a big win. And just this morning, Biden came out, and I'm looking up for you right now, and they put a plan out this morning that they're going to be spending pretty big, basically, on EV charging. And I think, they're going to have $5 billion plan, and the first tranche of a $7.5 billion pool that's for the states to build more chargers. So in total, $7.5 billion. But they announced a 5-year, $5 billion plan for that to come out, and Congress approved a total of $7.5 billion. But we need a lot more charging out there, and especially as more come out. According to the numbers here, there's approximately 41,000 public charging stations in the U.S. right now, with more than 100,000 outlets. And obviously with, a couple 100 million people in this country, that's not going to do it. So we obviously need a lot more. But that just came out this morning. And let me show you the chart here of Wallbox. It's not up big on the news. It's up by 0.7%, but it's up big in the last, as you can see, last 2 weeks. But this is one that's going to have a commercial, which I think is going to be pretty interesting. To me, I love the fact that you're having commercials that are pretty cool, not just your typical. Another way to look at this is, does anybody know what the name of the stadium is? And it's the Rams' home stadium, and the Rams are in it. SoFi. It's SoFi Stadium. And SoFi, again, it's another recent IPO, folks. And the symbol is the name of the company, which is SOFI. This is one, again, that ran up big after going public. You can take a look here. Went public back via SPAC back in November, ran all the way up to nearly $30, and now it's back down around $13.10. But about a $10.4 billion company. And when it comes to SoFi, it's to me, it's kind of next-gen investing. It offers stocks. It offers cryptos. They recently were able to get a bank charter. So they're really going to start rivaling some of the traditional banks and investment firms. Their revenue is expected to grow annually 27%, big top line growth. Bottom line earnings 61%. And by 2024, which again, it sounds so far away to me, but it's right around the corner. Revenue is expected to hit $2.85 billion. So it's making real money, folks, bringing in real revenue. And it's supposed to be profitable on an annual basis for the first time in 2024 as well. We will see some big upside here in SoFi. And this was a SPAC, and all SPACs and IPOs are still trading well off their highs. I think there's some opportunity right here to look at some of these beaten down stocks. But again, you're going to hear a lot about SoFi. It's a name in a stadium. So just so you know, that's out there. So what about swag? What about the uniforms? People want to buy the stuff of their winning team or the jerseys. Well, Nike is the one who has the deal right now with the NFL. A few years ago, they extended the deal. So all the gear, the jerseys you see, all the stuff you see the coaches and players wearing on a sideline, it's all on Nike. And obviously, if you know Nike, if you don't know Nike, I don't know, you're living under a rock for the last 50 years. You can see a chart here. Symbol NKE is a symbol. It's a $232 billion juggernaut. Stock's down about 13% this year, just since the beginning of January. It looks pretty damn good down here. And if I look at a longer term chart of it, you can see this uptrend that it's in. It's kind of forming a bit of a double bottom. Again, not my forte to invest in this kind of bigger, slower growth companies, but Nike has a niche and they're not going anywhere. So you can expect, potentially maybe a buying opportunity on Nike down there. But if you're looking for swag, that's where you're going to look. There's also some big promotions going on. Facebook, now known as Meta, symbol still the same, symbol still FB. They're doing a collaboration with the Foo Fighters, which I like the Foo Fighters. They're doing a concert right after the game, but it's a virtual reality concert. So you need to have your Oculus VR headset, which is owned by Facebook, owned by Meta, and that's the only way that you can watch it, which is pretty fascinating. So as soon as the game's over, you could pop on your Oculus and watch this virtual reality concert with the Foo Fighters and feel like you're right there. And apparently that's going to be really cool, like the way that it's going to be filmed. Apparently they're playing some rare songs I was reading about. So I don't have an Oculus. I need to buy one. I really do. And I want to try. I maybe I'll even get it before then because I'd like to tune in and catch that if I'm still awake at that time. That's pretty late for me on a Sunday, but which pretty neat. So they're doing that. And keep in mind, let's take a look at Facebook's or Meta. It's always going to be hard for me to go back and forth and call it that. Look at this beating, folks. Look at that beating. Right up in here, Meta had a market cap, means a valuation of the company, about $1.1 trillion. Now it's down to about $635 billion. I mean, it wiped off, my goodness, like over $400 billion. Looking forward now, the forward PE ratio for Meta is down to about 15.5. That's the lowest ever. So it's the cheapest it's ever been based on earnings. It's got a PEG ratio, which is when you take the PE ratio and you put it on top of its expected growth of earnings. 1.4, which is pretty damn cheap for these big FANG stocks. Earnings are expected to grow annually about 9% going forward, revenue 12%. So not huge growth. Obviously, it's tough when this size to have real big double-digit growth. I look at this. I don't like to catch a falling knife. I talked about it when it was falling that day. I said, nothing here is advice. Nothing here is buy or sell recommendation. But I will tell you this. At some point, this becomes a buy for me. I don't know when that is, but at some point it does because it's not going anywhere. Meta's not going anywhere. They're going to continue to expand, and it's not going anywhere. But so those are some stocks to keep an eye on. And then there is the Super Bowl indicator. Who should you be rooting for? Well, if you take a look at the Super Bowl indicator, it goes back to since the Super Bowl rolls around. This is Super Bowl 56, I believe. And it takes a look at the AFC versus the NFC. And what it says is that if the NFC team wins, you'll see a bull market next year. If the AFC team wins, you'll see a bear market. But the last 6 years, apparently it's been off. And it's now been right 41 of the 57 games. It still has a 75% success rate. I'm saying this for fun that you want to root for the Rams because they're the NFC team. That being said, if you were ever to invest based off something as ridiculous as that, you shouldn't be investing because I think that's just absolutely ridiculous because who the hell knows? But I will tell you this. I'll give you my idea of what happens in this game. So the Rams are favored to win. And I think the line right now, if I'm not mistaken, the total points they think is going to be scored is 48.5 points. And the line on the game is, why can't I find this online? 3.5 points. No, it's not 3.5. 4 points, sorry. So the Rams are expected to win by 4 points, okay? And that means if they win by 5, you win the bet. I personally think that the Bengals surprise the world here. Joe Burrow's playing. He's caught lightning in a bottle. It's a quarterback. I think they do well. I think they win. I think it's a shootout. I think it goes way over 50 points, let on 48.5. So if I were doing it, I would take the Bengals +4. I would take the over, and I'd run with that. And then if you're betting on the coin toss, which I do every year, legally, of course, I take heads every year. I think heads. Heads is just good luck to me. So anyway, good luck to whoever your team is. If your team's the Bengals, if your team's the Rams, good luck to you. I hope it's a good game. I hope you have a good weekend. But I hope this was fun because really, again, our goal here is what? To educate you. We just educate you on a bunch of different stocks. Have fun talking about the Super Bowl, talk about stocks related to Super Bowl, and essentially make money. And I hope some of this stuff here can help you make some money. But again, inflation's hot, folks. Super Bowl's around the corner. To me, though, the market still looks good. Corporate profits are hitting an all-time high, and that's all that really matters at the end of the day. You're making more money, stock prices go up. So keep it pretty simple, folks. Well, again, thank you so much for watching. Have a great weekend. Enjoy the Super Bowl. And I'll tell you, enjoy the chips and dip. Don't eat the veggies. It's one day. Enjoy yourself. Have an extra wing. Thank you so much for watching. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.